What's up guys, welcome to Bullish Bets. On this channel, we cover all things related to stocks and investing. We take a look at news where we could place some potential big bets with huge upsides. In this video, we're going to talk about XPeng. Before we get started, keep in mind that we're not financial advisors and this video is for educational and entertainment purposes only. Make sure you do your own research before making any investment decisions. So we all noticed the EV trend spiking in the market, starting with Tesla. Behind that, we have big names, meme stocks like NIO, Li Auto, XPeng, Workhorse, Ride. Everyone is speculating that all of these EV companies are in a bubble and it's time for correction. But is this recent correction in March for XPeng justified, or is this a pullback reacting to market conditions? And is it worth buying the dip on this one? We're going to go over that in this video. But first, let's take a look at XPeng and the recent price action. From January 21st, 2021, it started to look pretty gloomy for XPeng as it went from $52 a share to around $28 a share. Some of this is due to the correction in the market as the Biden administration doesn't really seem to be as strong as going green as they promised before going into office. But it also had to do with some of the results of competitors like NIO, who had good revenue stream increase, but they had poor earnings, and it caused some investors to pull back. And this is currently happening in the market. There's a huge pullback to $28, and it's similar to the price that of November 3rd of XPeng before it released its first earnings report. That being said, XPeng seemed to be doing pretty well in terms of Q4 of last quarter, as they increased the company increased their delivered smart EV vehicles to 12,964 vehicles in Q4, and this is a record quarterly delivery as it increased 300% year over year and 51% from the third quarter of 2020. This puts them at, if we take a look, this puts their estimated revenue before the revenue comes earnings report even comes out to around $3 billion, which is 50% more of around $2 billion that they had last quarter. This puts them in a good spot, and one of the reasons that we think this is currently a good play is because a lot of the pullback are due to adjusted expectations that is put on XPeng, due to the fact that last quarter they missed earnings by a lot. Their estimated earnings was supposed to be negative 17 cents, and the actual earnings was actually missed by 100% at negative 33 cents per share. And people are probably making their adjustments and price actions due to the fact that due to the small sample size of history of earnings report of XPeng, they had bad results, and it's anchored to the amount that earnings are probably going to be bad. But with that being said, if XPeng outperforms in earnings, even compared to last quarter and not even NIO, there might be a huge price jump that you can potentially play. With the amount of deliveries that XPeng have, the revenue can't come short at all, and it's going to be an increase. It's just how people are going to react to what XPeng is doing. Let's look at how XPeng reacted when the NIO earnings came out. NIO's missed earnings by some amount too, and the report came out on March 1st. If we look at the price of XPeng on March 1st, let's right here. There was a huge dip after NIO's earnings came out, from $35 to $32 ish, and it's been a bloody week of March and late February, and it kept going down due to the fact that there's going to be a correction upwards, as XPeng isn't decreasing in revenue, it's growing exponentially. It increased their delivery by 300% and quarterly by 51% versus NIO, who only increased their year-over-year Q4 revenue by deliveries by 110%. And this shows that XPeng is going 3 times faster, and the demand for XPeng is going up exponentially, and probably because it's priced at a more reasonable rate than NIO, and probably because consumers like their car better. And so, do you think the dip is justified for XPeng, and is it worth it buying in before earnings, just in case there's going to be a huge spike? Do you think it's better to stay away from earnings call plays in general? Do you think that this is a huge opportunity to buy in? Like I mentioned, that the expectations are low for XPeng on earnings report already. So let us know what you think in the comments below. If you liked our content, please subscribe and give us a thumbs up. And we would really appreciate it, as it helps with the YouTube algorithm to get more people to see our videos. Thank you very much for watching, and stay tuned for our next one.